Dear students, welcome back to Bishop Academy online classes. Today we have to start with the very first chapter of economics, second term, that is money and credit. Now you have to know about concept of money. Before starting the chapter, it becomes essential to get discussed over the major learning objectives. Among them, the very first is different phases of evaluation of money. In this point, you will get notice or information related to the introduction of money. Second, definition, features, functions and significance of money. Third, various modern forms of money you have to be introduced with. Fourth, that is bank and its basic functions, how these banks are helpful for us. You get information about it in forthcoming slides. Next, that is credit, terms of credit and their role in society, how this credit become helpful for people within the society. Next, sources of credit and critical analysis, why and how entire these sources are beneficial for the people or even they are considered as curse for the people. Next, role of cooperative societies and self-help groups in capital formation. So these are your major learning objectives to which you have to understand while studying these chapters. Now we have to begin with the very first concepts, that is concept of money. Money, anything which is used as a medium of exchange, store of value or measures of value and standard of deferred payments, means anything which provide you power to purchase the things is considered as money. Here you find that different modern forms of money which are card money or plastic money, which is most common nowadays, in which debit card, credit card, smart cards, health cards, etc. Entire these terms are considered as plastic money because they have capacity to convert one form of money to another form of money, that it handle demand deposit within your banks and convert it in currency. When you deserve it in physical form, it convert it in virtual money when you use it online shopping. Along with it, digital cash, the cash which you use in net banking, mobile banking, such type of facilities where you do not use money or paper notes or anything else, you use digital cash. The digital cash gone from your mobile and deposited to the account of that particular person to whom you transferred it. Along with it, there is bank money which could be used with the help of check, demand draft, banker's check, etc. Entire these things make you capable of using your deposit with bank. Next, that is credit. Credit, to which you have to study. So credit is a term used for achieving or acquiring money in lieu of, or you can say exchange of, future payment. Means to say, in credit you get money which you do not possess. Okay. Here the definition could also be much clear. Money can be anything which have purchasing power, used as medium of exchange, used to measure value of any goods or services. Means we compare the units of money in exchange of these goods and services, used to transfer value from one person to another or from one place to another. Means this money could be acceptable to various places, in various even countries. Along with it, used to store value for future use. This money could be what? Stored and even used as a standard of deferred payment. Next things you have to know about type of money. These are demand deposits, which also considered as your deposit with the bank, and this type of money are discussed in previous topic here, that is card money, plastic money, digital cash, bank money and credit. So here the things become very clear that demand deposits, on which all these concepts of modern money depends. Money in demand deposits can be withdrawn at any time through check or ATM, etc. It can also be used to make payment or purchase at any time through check, debit cards, net banking, etc. Along with it, it also have purchasing power, means with the help of deposits within your bank, you will be capable of purchasing anything in society or in market. Anything having purchasing power is money, and therefore demand deposit is money because it capable you of what? Purchasing something. Now we have to know about different form of money. Before, you can say in the initial time, commodity is considered as money. Why? Because the most primitive type of money is commodity money. Some useful commodity that is in general demand is used as an exchange medium and may serve both as a means of payment and a measure of value. Means in ancient time, the people exchange commodities to satisfy their need. With the passage of time, the next concept of money introduced, that is cattle money. Cattle is also considered as a commodity, which came in existence after this commodity money and started to establish a standard of exchange. To overcome the problem of transfer of value with commodity, many people started using cattle as money, and they determined the value of things in lieu of these cattle, like goat, sheep, cow, horse, elephants and the rest. Okay, means to say, if you have to purchase a quintal of rice, then the value of quintal of rice may be 2 sheep, 2 goats, 1 horse, 1 cow. Such type of exchange are decided by the ancient people. Next concept is of metallic money, which introduced in medieval period. Some precious metals like gold, silver, etc. having common utility were started using as medium of exchange in lieu of, or you can say at the place of, cattle money, and cattle money introduced at the place of commodity money. Okay, so metallic money started to use what? In exchange of these things, commodity and cattle, because this metal have a lot of value, and that's why people started to exchange the cattle and even commodity in lieu of this metallic money, and this metallic money become, or you can say get importance with passage of time and started to be accepted throughout the globe. Next, you have to know about the barter system, which is the ancient way of exchange. Here, the system of direct exchange in which commodities are exchanged for some other commodity without using any medium of exchange, or in the previous slide where you know about commodity money. So, commodity money exchange through the system which come to be known as barter system. So, here you find the main features of barter system is it is the oldest exchange system. Second, goods or services are exchanged or swapped for other goods or services directly, means there is no need of traders or other persons. There was no common measure, or you can say, of value. The value is decided by the seller and the buyer itself. There is no other persons which increase or decrease the value of things. No money or other medium of exchange was used. That's why it become very simple and people exchange the things. Along with it, double coincidence of want is an essence of barter system. Means in barter system, two type of persons are essential to exchange the need of each other, which is very difficult. So, now we have to know about the advantage of barter system. So, it is closely associated with the feature of barter system, that first it is the direct exchange system and therefore needs cannot be satisfied can be satisfied immediately. Means if you need something, you have something, you provide the thing which you have in lieu of the thing you deserve, and it is quite easy. You have not to change it with the standard form of exchange, and that's why no medium of exchange is required. And third, low transaction time is required, which helps the people to avoid the risk of change in value over time. As you find, when the production of things increase, then the value of things decrease. So, here if the person introduced with barter system, then there is no chance of increasing or decreasing of the value, as it is ancient, or you can say way of exchange. Limitations, among them the very first is need of double coincidence of wants. Means if the person want to exchange the thing, then certainly the person need other person which wanted to change his commodity. Suppose in a market there are three persons having sold their items, but none of them deserve the same thing which they want to sell and want to purchase. Suppose a person want to purchase grain and have a goat. On the second way, there is a second person which want to purchase goat but have cloth to sell, and on the other hand there is a person having what you called have to purchase grain, but the person have to sell cloth. So, all the needs could be satisfied at that particular place, but the trade could not be possible. This is the limitation of barter system, and it also considered as double coincidence of want. Along with it, there is lack of standard and measures of value in exchange, as in barter system if the person have to exchange a fish and a goat, then if the value of fish is very low, then we could not cut the goat to exchange. This type of problems could be faced in barter system. Even there is problem of divisibility, as the living stocks or cattle money could not be divided. Even the problem of storing values, this value could not remain the same, as there is what called the need started to be sell within the market, due to which a cow could be exchanged with a goat. Such type of things could happen. Along with it, problem of transferring value. Here in barter system, the value have no meaning. That's why it created problem. Along with it, deferred payment was not possible. Next, important points about money in India. In India, the coins and paper currency of paise or rupees are generally accepted as medium of exchange or money in India. Paper currency, note and metallic coins for denomination of rupees 2 and above are issued by Reserve Bank of India in permission of Finance Ministry of the central government. At present, it issues coin and notes of rupees 2, 5, 10, 20, 50, 100, 200, 500 and 2000. Rupees 1 and its subsidiaries are issued by the Ministry of Finance. It issues coins of rupees 1 and 50 paise coin, which are not in practice nowadays, 50 paise coins. Okay. So, why should we study about money? Because all of us want a good income in our future, which is measured in term of money, because this money have power to purchase goods and services for us. Along with it, money is means through which we measure how much we earn, we spend, we lend, we borrow, we save and we donate. Entire these things indicate our capability. Along with it, to earn economic wealth, managing money is no way less important than earning. If in the absence of money, there is no meaning of your earning, because it is money which provided value of your earning. Along with it, studying about money and credit enable us to make wise economic decision like allocation, investment, saving, expenditure, entire these things. Now you have to know about emergence of exchange. With the growth of civilization, needs of people started increasing. That's why they need to exchange the things, because all the need of the person could not be satisfied by their own. Along with it, people who were expert in providing some goods started taking it as a profession, and that's why the exchange of service come into existence. They started collecting other goods that they need from other producer in exchange of the goods produced by them, and due to it the exchange of things started. Here is an example: a person making stone tools give the tools to the hunter and get meat against the tools. So here you find that need of both persons satisfied with exchange, as the person which making tool get meat to eat. It is not quite easy for that particular person to hunt, but that person which is a good hunter could not have much time to prepare their stone tools. So the person get involved in making tool benefited with the achievement of hunters. Along with it, both these things lead towards development of barter system. Next, you have to know about banks. With the passage of time, exchange work adopted by bank. Before bank, the traders work as the mean of exchange between the person, and before traders there would only people which used the things on the base of barter system. So bank is a financial institution who deals with the money and credit as its regular course of business. Means bank get involved in providing and accepting money. It accepts deposits from the depositors and grant loan to the needy borrowers. And certainly you know that it provide less interest to depositors and charge higher interest to borrowers. And the difference between these two interest is utilized by the bank to fulfill the need of its employees and of maintaining the things within the banks. Now you have to know about the functions of the bank. Banks accepting deposits which the person provided them, along with it granting loans to the needy persons, providing safety to values of customers. Those persons provided their money to bank, then they have no fear about theft or any type of natural calamities. In case of both these things, their deposit with the bank remain safe. Along with it, they have capacity, bank providers capacity to transfer fund from one place to another for consumers. Means if you have amount and you deposited it in Maharajganj bank and you wanted to send it to your brother or father or sister which are living in Delhi, then these banks become, or you can say make you capable of performing such things. Along with it, making payment on behalf of accepting payment for customer. So here the case which discussed before, in which you send money to the bank which is situated in Delhi. So the bank accept your money in lieu of that particular person, your sister or father, and provided that money to them. Next, making payment on behalf of the customer, like paying electricity bill, insurance premium, etc. Entire these things could be paid nowadays by the people from their mobile phones or net banking. Entire these things could be possible only with your deposits within the bank. So bank make you capable of performing such type of things. Now you have to know about major type of deposits with the bank. Among them, the very first is demand deposits, that is also come to be known as saving. These are called demand deposits because these are withdrawable at any time on demand. Along with it, it includes deposit in current account and saving account. The amount which you kept in your current account or saving account, it is considered as demand deposit. Second is time or term deposit. It is withdrawable after a certain period of time, like STDR, special term deposit. It includes deposit in fixed deposit account and recurring deposit account. What these accounts are, you could be capable or understanding it in forthcoming slides. Type of accounts, among them 4 major types of deposit accounts run in present time. Among them, the first is saving deposit account. Second is current deposit account. Third is recurring deposit account, and fourth is fixed deposit account. Entire these accounts have certain rules, regulations, terms and conditions. As saving deposit account, here no restriction in deposits. Mean the person could deposit however they can. Along with it, withdrawal is possible at any time subject to some restrictions, as some of the bank provided facilities to withdraw one time within 24 hours. Here is low interest rate, means those persons kept their money in saving deposit account, they get 3 to 4% of interest. Main purpose of opening such account is saving and meeting uncertain urgencies. Means if the person have excess of money, they deposited it with bank, and if they need money, they could take it from the bank. Along with it, a small businessman and people with low or moderate income open such account. It is the most common account used by people. Second, current deposit account. Here no restrictions in deposit, means the person could deposit however they could like. Along with it, no restriction in withdrawal. Means in such type of account, the person could withdraw as much or many times how much they deserve. As in saving account, the person could withdraw once in a day, but in current deposit account, the person could withdraw as much the person deserve. Along with it, no interest is paid in current deposit account, where you find in saving account, bank provide interest to the person depositing the money, but in current deposit account, bank provide no interest to the person. Along with it, main purpose of opening such account is to provide safety to consumers' cash. Means certainly those persons get involved in businesses, if they kept huge amount with themselves, there is a threat of theft or robbery. That's why bank provided them such facilities to deposit the amount as much or many times they deserve. Along with it, rich businessman and organization open such account, that is current deposit account, because it provided them various other type of facilities. Next, that is recurring deposit account. In a recurring deposit account, fixed amount is deposited at a fixed interval of a fixed period. It may be day, week, month, 3 month, 6 month or a year. It is come to be known as recurring deposit account. Withdrawal is only on maturity, when the time period get over. Means to say, if you have a recurring deposit of per day and for 1 year, then the amount could only be withdrawn at the end of the year. Next, good rate of interest is paid by the bank on such type of deposits. Even main purpose of opening such account is capital formation and saving. Those like capital formation, means wanted to be rich with their saving, introduce or you can say open such type of account with bank. Next, that is fixed deposit account. In fixed deposit account, person deposited a fixed amount for a fixed period. Withdrawal is only on maturity, as we find in recurring deposit. Even highest rate of interest are paid in this type of account. So if the person want to get more and more interest, then the person have to go with fixed deposit account. Along with it, main purpose of opening such account is to earn interest and save for certain future needs. Even people having no other investment option and with some certain future needs deposited the amount in fixed deposit account. Next, you have to know about cooperative society, which are considered as substitute of bank and becoming very famous nowadays. So here you find that organization of people joins for mutual help. Means to say, these cooperative societies are for fulfilling the need of persons. They could perform economical activities, social activities, religious activities and other all type of needy activities could be performed by these cooperative societies. Development of the member is the main purpose, not earning profit. These societies have what motto of providing what economic strength to the members. Along with it, registered under Cooperative Societies Act. So all cooperative societies, if they like, could be registered by government or with government and get certain facilities as the banks get. Along with it, minimum 10 members are required to form a cooperative. Okay? Type of cooperative, these may be farmers cooperative society like IFFDC, which is a very large farmers cooperative society. Along with it, producers cooperative societies like you could know about various type of MNCs or like Amul and Lijjat Papad, Sri Mahila Grih Udyog. Weavers cooperative societies that has been considered as the silk sarees maker of Banaras or Kanjivaram sarees maker or handkerchief makers of Madras, etc. Along with it, consumers cooperative societies which run various type of shops in town or cities like Mother Dairy and others. Along with it, cooperative credit societies which run in financial segment like Nagar Sahkari banks, etc. Role of cooperative society in capital formation. Cooperative accumulates its capital with the contribution of the members, means it store the amount contributed by its members, and sometimes they take loan from the banks and NBFIs in the name of cooperative and use the fund either in collective investment or grants loans to the needy member of the society. They charged a low rate of interest as their motive is not to earn profit but the development of economic condition of its members. So here you find that cooperative society provide financial freedom to its members. Next you have to know about credit. Credit is an arrangement in which one's financial need is satisfied with the money or resources of another with a promise to repay in future. Means when you promise a person and get money to use in present time and you promise him to pay it in forthcoming years, or in simple terms, if you can say we consider it as loan, which is the most common word in present time. So loans are considered as credit, or loans are the second name for credit. Now you have to know about sources of credit. So this credit or loan may be come from the individuals or organization. Means your friends, relatives, such type of persons could provide you loans. Here you find that banks, national banks or federations, cooperatives, family members could also provide you loan or lends or gifts. Along with it, friends, traders, money lenders, entire these persons get involved in credit activities. These are the persons from where you get what? Credit or loan. Now for accepting any type of credit, it becomes essential for you to understand the terms of credit. Here 2 or 3 things are essential. Here you find different conditions in which the borrower and the lender agree before granting or taking a loan. These things are considered as terms of credit. It includes rate of interest on which the money given or accepted. Second, mode of repayment, whether it is cash or in way of commodity. Collateral means if the loan could not be paid, then how the amount be obtained. Suppose a person or you want to purchase a cycle, and for it you need what? Credit, and you contact to money lender. So money lender wanted a guarantee of loan repayment, and you provided, and you just told him that if I can't pay the loan, you could keep my buffalo or cow. So that buffalo or cow is considered as collateral. Even the banks need collateral. When bank provided you credit or loan, then they preserve or protect the document of your certain fields or houses or even the deposit of gold etc. as collateral. These collaterals are guarantee for repay of loans. Collateral may be what you called property, maybe animals, maybe houses etc. Along with it, documentation. Which type of document are used while getting this source of credit? As at some places no documentation is essential, as if you want to get credit from your family member, they provide you, you can say there is no paperwork, but even if you want to, if you get credit from friends, no paperwork be done. But if you want to get credit from money lender, then the money lender provided you a paper on which it stamped a stamp ticket, and there he provided you what to sign. And if you take loan from bank, then the bank use stamp paper for documentation and check all the detail which you provided to the bank. Next, you have to know about do credit is always beneficial. So here you find that credit provide you chance of development. Credit sometime may be burden for the borrower and may lead to debt trap when the credit is not used in production activities or used in production activities with what you called insincerity, then credit become, or you can say leads the person towards debt trap. Debt trap is a condition when person find it difficult to repay the credit, and for paying the loan the person deserve a fresh loan. So such type of condition is considered as debt trap. This is the root cause of poverty in India. Credit can be burden mostly in the following circumstances. Among them, the first, if borrowed at a very high rate of interest, as in informal source of credit, or when the person get credit from money lender, it charge up to 60% annum. On the other hand, if the person get credit from bank, it may be maximum 18%, 1/8. On the other hand, informal sources of credit, that is money lenders. So money lenders provide 8% a month. On the other hand, bank provide 8% a year. So here you find, if you take higher interest rate for credit, then there is a large, or you can say maximum chance of involving in debt trap. If borrowed money used for unproductive purpose like marriage or collecting luxurious things, means if the amount could not provide you something, then you could not get a chance to repay it. If invested in a business with high risk of failure, so if your business collapsed, then you could not repay the loan. Along with it, delay in repayment of loan increases the burden as the amount grow in cumulative interest. Means if you take a loan, it becomes essential for you to be curious about its EMI, estimated monthly installments. Along with it, failure to repay the loan may cause charge on the property of the borrower which has been kept as security against the loan. Means If the person do not repay the loan, then the collateral that has been granted in lieu of this credit may be observed. Next, taking fresh loan to repay the previous loan and fall in debt trap, recovery from which become very difficult. Most of the person could not escaped from debt trap. Now you have to know about status of lending and borrowing in India. So in India, both formal and informal sources of credit is working simultaneously. Formal sources are those sources that has been accepted by government, and informal sources are those sources which are not accepted by government. Major part of the formal source lending goes to the large industrial sector, while informal sector provided loan to poor and what you call workers and poors. Small borrowers, that is small farmers, laborers class and small artisans and businessmen etc. mostly borrowed from informal sector. Why such type of things happened? Because entire these persons do not have collateral, and for formal credit collateral is essential. Now role of credit in development. So credit makes proper use of excess money of the depositors by the channelizing it to a profitable investment. Means within the society we find that some person have a lot of money, but they could not use it due to absence of their what you called economic aspects or economic knowledge or industrial's mind. So they provided it to banks, and bank provided it to those persons having business mind, and they use that amount to create new goods and services, enable the borrower to invest more than their resources available with them, even maximize the use of resources by providing working capital. Even it helps the lenders to earn interest from their savings. Those lend the money benefited with the interest, means their amount which deposited in bank increased day by day. Now you have to know about sources of credit which we discussed before. These are formal source and informal source. Formal source, these are controlled by RBI, reasonable and justified rate of interest, along with it granted for productive purpose only, along with it more documentation is required, along with it legal proceeding followed to recover loan amount if the borrower fails to repay. So these are the features of formal source of credit. On the other hand, informal source of credit not controlled by anyone, mostly high and unjust rate of interest on which borrower and lender become agree, along with it granted for any purpose, no or less documentation is required. In most of the cases we find that the credit provided by informal sources without any paperwork. Even lender can take any measures to recover loan if the borrower fails to repay. Various type of violences could also be occurred. Those persons provided informal source of credit use violence or various other type of unjust means of repaying loan. Now you have to know about the formal source of credit advantage. So advantage है low rate of interest. Second, adopt judicious policy to recovery of loan, even grants loans only for productive purposes, and chance of falling in debt trap is less because they supervise whether you utilize the amount in productive work or not. Second, helps the borrower for effective utilization of the loan amount and promote development. For this purpose, they provide basic guidelines and also help the people in production activities. Along with it, interest rate is fixed considering the prevailing market and economic condition, and therefore the risk of borrower are less. Limitations: it grant only secured loans, so the people without proper collateral cannot borrow. Means, for getting formal source of credit, it became essential for a person to have collateral. Along with it, long process of high documentation. Various type of papers are essential for granting formal source of credit, which ordinary people could not complete it. Along with it, difficult to get loan to meet small financial needs. Means, formal source provided to person in a huge amount. A small loan could not be passed in formal sources. It grants loans only for projects that are productive in their eyes. Means, if other persons get benefited with such type of projects, then they provided loan for that. New type of goods and services could not be covered under such type of loans. Located at far from the borrowers, particularly in rural areas where you find banking services, or you can say banks are not in abundance, a person have to travel kilometers of distance to reach at the bank. While in the big cities, they get facilities of banks just aside of their residence or to their workplaces. Now, you have to know about informal source of credit. Here, very easy process and instant credit. It provide credit as the people deserve it and ask for it. Along with it, less or no documentation, even full or high level of autonomy to the borrower, and even in the field of utilization of fund. Means, the lender do not provide too much care where you are using your fund. Along with it, free to fix the loan amount and time and mode of repayment. Entire these things has been decided by whom? Borrower. On the other hand, in formal source of credit, entire these things has been decided by lender, that is bank. But here in informal source of credit, entire terms and condition accepted by borrower. Along with it, loans are granted to meet all kind of financial needs. Limitations, among them the very first is high rate of interest. Next, though condition of tough conditions of repayment, means on particular date it become essential for the person to repay the loan. Otherwise, various type of activities or punishment could be provided by these money lenders. Even sometime it could be fatal for the persons which adopting the loans. Along with it, under any unnecessary interferences in utilization of fund, along with it, unjust and unethical means of recovery of loan if the borrowers fail to repay. We find that various type of persons, or you can say use or become violent in recovery of loans. That's why the life, property and various other things of borrower is under threat. Next, mostly grants loan for unproductive purposes, which is detrimental to the interest of borrower as well as the economy. Means, people use informal source of credit in mostly in unproductive work, and that's why they could not benefited by this credit.